Last week, all major US indices rolled back at first, but then rebounded upwards, closing near the highs of the year. Find out in our video review what triggered their rally and what scenario we should expect this week. Let's start with the Dow, one of the largest US industrial indices. On Monday, the Dow was trading at 33,200, 33,300 points. Over the past week, it added more than 300 points or 1% of its value. Such a robust growth in just 7 days can be called even historic. The fact is that Dow's rally was fostered by positive dynamics in the oil market. Currently, oil prices remain at high levels despite the correction. Besides, demand for consumer goods is also buoyant, which means that the manufacturing sector does not experience a production deficit. The Dow and the S&P 500 indices are expected to reach new highs of the year in the coming days. They may also gain 1 to 5% until next Monday. The target levels are 33,400, 33,500 points. The S&P 500 index, which measures the stock performance of 500 large companies, showed a weekly increase of about 20 points. It hit the level of 39.70 by adding 0.5%. S&P 500 advanced amid a rise in shares of the biggest banks such as Citi, JP Morgan and Goldman Sachs. The Fed announced that it would again allow the nation's big banks to resume share buybacks and raise their dividends. The restrictions were introduced after the 2009 financial crisis. The index is expected to reach the target level of 3,950, 4,100 points. Meanwhile, in comparison with other indices, Nasdaq is the weakest one. It's facing strong bearish pressure after the significant recent growth. Investors are worried about a new considerable fall in the stock market. Last week, Nasdaq dropped by 130 points or 1% due to such fears. It is forecast to rise over the week, but to remain below its highs. Thus, it may reach the target level of 13,000 to 13,150. And now let's discuss those stocks whose dynamics surprised market participants last week. For the past 7 days, investors have been actively buying shares of American companies. They favored the stocks of certain companies after the optimistic forecasts on their profit growth. Those companies that have suffered the most during the pandemic are projected to become the biggest gainers amid mass vaccination. Walgreens Boots Alliance shares are expected to see a boost in the near future. This is the second largest pharmacy chain in the United States, which is currently showing positive dynamics. On March 31st, the earnings report for the second quarter of the year will be published. It is highly likely to be upbeat. Therefore, many traders are ready to add the company's shares to their portfolio. Micron Technology, a global leader in the semiconductor industry, is also gaining momentum. According to experts, in the second quarter of the fiscal year, it earned 93 cents per share. Its revenue totaled $6.16 billion. Additionally, the computer chip maker raised its own revenue and profit forecast for the latest quarter amid a surge in the demand for memory chips used in phones and computers. At the same time, Viacom CBS shares have fallen significantly over the week due to the probable bankruptcy of Archegos Capital Management. However, analysts reckon that the decrease was too sharp and a correction is likely to occur. Overall, the US stock market is trading buoyantly ahead of April and the announcement of the second fiscal quarter results. In comparison with the EU, the US economy is recovering rapidly, so the negative impact of the coronavirus on the economy has been negated by a $1.9 trillion aid package. So far, the US government's anti-crisis plan has proved to be effective. The US market also advanced thanks to an unexpectedly strong weekly employment report. After unemployment has been stagnating at the level of 4,100 for several weeks, it fell by 300,000. It is projected to decline to 6% from 6.2%. Experts are sure that it is likely to drop even more. The Biden administration is pulling together a new sweeping $3 trillion package to boost the economy and narrow economic inequality, beginning with an infrastructure plan. Vaccination rates in the US are quite high, unlike in the EU. Up to 200 million Americans are scheduled to be vaccinated by early summer. The US economy, along with China, remains the main engine of global economic growth. You've watched a weekly financial review on Insta TV with me, Anna Kasatkina. See you back soon.